Hi, and welcome to this edition of Market Analysis Pre-Market for today, August the 17th. I'm Giovanni Benacour, educator and trader with Vantage Markets. Well, let me start by saying happy hump day, all right? I'm reporting with my caffeine powering me through this morning, and all I did was turn on a kettle. But Germany is going to great length to secure extra energy and is still playing catch up. Amid an intensifying supply crunch, the ongoing war in Ukraine, and uncertain politics of Russia, Europeans are feeling the squeeze. Let's take a look at a breakdown what Germany specifically has had to do to navigate all of this. And really, a perfect storm is brewing in Europe's energy market. And obviously, Germany is right in its path. German baseload year-ahead power prices, the European benchmark, are up almost 500% from a year ago. Bloomberg data shows as costs have climbed for nearly a week straight. Now, at the crucifix of the price jump is the surge in natural gas prices, which has spiraled higher as Russia has kept exports to Europe extremely minimal. So the country's top regulator already warned that Germany must dramatically pull back its gas usage to avoid a shortage this winter. So over the past week, the continent's biggest economy has made a flurry of moves in response to Russia's energy blackmail against Europe, including pushing off the closure of its remaining three nuclear power plants. Each was slated to shutter by 2023, but Russia's energy cutoffs have opened the door to an extension. And at the same time, Germany has inked a deal with natural gas hubs to keep two terminals stocked through the winter ahead of any more potential cuts. And this is what Reuters has reported. Meanwhile, a German refinery, partially owned by Moscow, has started mixing U.S. oil with Russian crude. About 20% of the refinery's output is U.S. crude, according to Bloomberg, which marks a pivot point from before when it was slowly reliant on supplies from Russia. It's possible some relief may come from a new gas pipeline project that will connect the Iberian Peninsula to France. Officials say it will be ready in 9 months and that it will boost Spain's gas export capacity by 30%. But Deutsche Bank does not seem to be betting on it. So, with that in mind, let's take a look at what the markets have stored for us. If we were to open right now, we'd be opening to the downside. Obviously, after such a nice strong move in the Nasdaq, returning 20% off its June 16th low, and entering into what many people are calling a bull run, and some are calling a bear rally. So far, if the bear rally is to be considered, we have made a high, and from this high, we should start retracing. Now, how much of a retracement is good or is healthy? Let's use our Fibonacci retracement tool so we can use this low of August 11th to this high, yesterday's high, and let's just move to the cross. So from this move, from this low to this high, the 50% or the even Fibonacci golden ratio is the norm. It's normal, it's healthy for this to happen. So we still have, somewhat more what to come down. Roughly, I will say about 60, 70 more points to come down to our Fibonacci golden ratio. And from here, be able to find that support and then continuous move to the upside. Now, obviously, if we come back down to our low, then we will be saying that the market has retraced all of this movement to the upside, and it could more well continue to even a lower lows. So let's take a look at a 4 hour, and a 4 hour we will see that if we were to use instead this low of August 9th, August 9th, there you go. No, wait, why are you taking that? This one, okay. Well, let's keep that one on there. All right, so if that was the case, then we are still, the normal will be, the common will be 0.38%. The 50 will be the normal, and obviously between 60 and 50 and 0.61%. So we still have a lot more room to go. I will assume that if this movement to the downside continues, we most likely will hit our psychological level of 13,400 today. So let's keep our eye on that. Here's the S&P 500, same scenario, same idea in regards to the movement. Let's see, let's take this low and this high. And so we'll see that we haven't even come close to our 0.38%. And our support is real close to that. So I will assume we could find some support around this area in the S&P 500. Now we have crude oil. Crude oil has been pulling back modestly. We have found support right around the 85.50 mark, and the market has entered in what I call ranging, lateral of movement, consolidation. Okay, so from here the market most likely will break out. Now the consensus could probably be to the downside, to the 84.62 level. Nat Gas is the one that we want to keep an eye on. A lot of movement is gonna a lot of volatility is gonna come out of natural gas. The demand is still obviously high, and it will continue to be high, and the supply crunch it will be even higher. So we'll be seeing a lot of more movement. I will say $10 is our target for let's say between now and October, but between now and September, at the end of the month, could be today, could be next week, it could never come. But going with what the history tells us, that if demand is higher than supply, then prices will continue to rise. So having that premise, we have obviously that demand is going to increment as we fade into autumn, and we really increment as we enter winter. So that's going to be interesting to see if we will reach $10, if we will reach even higher values of $10. So keep an eye on natural gas. At the moment, I will say that this movement, it could be profit taken, coming down to around this levels of 9.40, again, to find that support. Here we have gold. Now, gold really has pulled back from trying that attempt to stay above 1800. It has gone down to 1765, and from here it has rebounded. But if we consider how the gold is used, and the miners are having a hard time keeping up with demand, then I suppose that we could probably see prices steadying around this channel, right above our support level and right below our pivot point. So we could probably see a ranging scenario or consolidation stage between these channels. Then we have silver. Silver is trying hard to stay above our support. The pivot point is right above it, acting as a resistance. So again, narrow channel for silver. Copper is looking to stay right above 358. It needs to break that 360 level, trade back above our pivot point, and that's what I will assume today. it will probably come up to trade above our pivot point by the end of the day. Let's take a look at Bitcoin. Bitcoin it has its own mind. Look, I assume that Bitcoin 23,400 is my psychological support level. We have been doing, lower lows. We got to come out and take out this lower low, and taking out that lower low will bring us down to our psychological level. So be aware of that. I will assume that Bitcoin will come down a bit more. Now we have the euro. Euro wants to stay right around our pivot point. I will think that the euro will be very, very narrow trading, okay, for the euro. And then we have our dollar index. For it to break above 107, it'll be interesting to see if that will happen. Obviously, they're sustaining the value above 106.50, and that's good news for all the all the manufacturers in the United States. The United States wants a strong dollar. The only people that are hurting will be the exporters, but the importers, the importers will be the one hurting, not the exporters. So that's the only benefit on there. But yep, dollar index will continue to stay strong. Anyway, well, that's it for right now. I want to also invite you to my webinar coming up next August 24th. That'll be next Wednesday at 1 p.m. UK time. I'm going to be having a webinar to go over the Fibonacci retracement tool and the Japanese candlesticks, the patterns of the Japanese candlesticks. That's August the 24th at 1 p.m. UK time. I'll see you at the end of the day for the market analysis at the close. Have a nice trading day.